Hey guys, Chuck Barone here. Wednesday, August the 3rd, 2022, and the zany just keeps on going. Hey, I want to apologize for not getting a video out yesterday. Apparently I caught some kind of little bug where I was up in Reno and was feeling pretty low yesterday. Still not quite back to 100%. That's why you see me dressed ultra casual here. When I'm done with this video, I'm going to go home and hit the sack, and hopefully I'll be back to 100% tomorrow. I want to thank you guys for your support. I can't tell you how much I appreciate it. You guys, I believe the guys who watch this blog faithfully are the best people in the world. I can't tell you how impressed I am with your support and the way you guys, the things you guys have done and said to support the channel. We really appreciate it. In the markets today, wow. Stock market today, unbelievable rally, up across the board, nutsoville to the max. I guess this market just insists on not looking at things the way they are. You know, they want to presuppose that this inflation is going to go away. And even if it doesn't, the Federal Reserve is going to give up their mandate and start cutting rates back down. They're already starting to price that into the bond market, which is just crazy to me. So as long as stocks believe the easy money is going to be around or come back soon, you're going to have this kind of rally. I think that earnings have been coming out, and there have been some companies that have posted pretty good earnings. And of course, our friends in the media are trumpeting those big winners while kind of neglecting to talk very much about the losers. Remember that one day last week I told you there was one new high, 29 new lows. What are you hearing about? The one new high, yay! Anyway, stocks, crazy time. The bond market had a little activity today. A little bit of a sell-off in the market. The 2-year got all the way up to 3.10. So now that's looking a little bit more reasonable spread between an overnight rate at 2.65 and a 2-year rate at 3.10. It's looking a little more natural, okay? But the 10-year had a blowout day today, came up all the way to 2.74%. Really? Really? So now there's a less than 30 basis, it's ridiculous. The numbers are incredible. You got 2.74 on a 10-year, 2.65 on an overnight rate. Somebody needs to help me make sense of that because I can't figure it out. The dollar, still the champ. I had a little bit of a dip there, back up on the index today, 106.38. There really isn't much competition for the dollar right now, while the Fed is planning on raising rates and has been raising rates. Obviously, higher rates strengthen the dollar, and that's what we're seeing in this market, which is a kind of an absolute conundrum for what the stock market is believing, right? Craziness. Gold today, closing at $17.66, up $5. Silver, $20.15, hanging on to that $20 number. I think that it's going to, I think that's the new support number, and I think silver is going to be, unless the dollar really goes crazy again, I think silver is going to hang in there a little bit. Oil under big pressure today, down actually to the lowest prices since Russia started their war with the Ukraine, and I guess they're seeing some kind of real collapse in demand for jet fuel. Explain all the canceled flights, guys. They're seeing demand and decrease in demand for gasoline. I don't know about you. I'm not really driving any less than I did before all of the big inflation became the thing, before we even started this blog. I'm not really driving any less. I'd like to see you guys in the comments tell me, is the price of gas really causing you to change your driving habits and dramatically change them? I got a feeling that the answer to that is not going to be a lot of yeses. Bitcoin had a nice day today, up $350, closing at trading at around 23,336 last I looked. It's holding steady. It looks like it had a nice bounce off its low. We could be seeing a little bit of a breakout coming up here. Actually, it's already broken out from its low, up well over 20%. Bitcoin looks like it's solidifying. In the news stuff today you guys need to hear about, can anybody explain how much this new bill that they're passing to reduce inflation is going to cost us? I've heard numbers between 250 billion and 750 billion. They think they're going to solve inflation by spending a whole bunch more money? Really? Where are they getting their lessons from? Remember when I was talking in a video in the past about how beating inflation is a two-pronged effort. You have to have solid monetary policy, which is the Federal Reserve getting interest rates high enough to dampen demand. And you have to have fiscal policy with the government not spending Brazilians of dollars more than they have. Well, apparently the Fed's doing its duty, but it doesn't look like the federal government and the spending crazies are doing their duty. I saw we just spent and sent over another $550 million to the Ukraine. Really? There was no place better for us to spend that money? There was no place where we could have put that money right here in America to do something for our own people? This seems to me like it's turning into a never-ending money drain. I would use words more profane if you were here in my office. It's just horrifying what we're seeing, right? In political news, tell me, guys, what was the purpose of Pelosi's visit to Taiwan other than to piss off the Chinese? Why would that be good for us in any way, strategically, politically, economically? What are we gaining from making this country a giant enemy? They have ambition. Guess what? So does everybody else in the world. We need to compete with them fair, not do this. I mean, does it look to you like it looks to me like we're determined to have a war with either Russia or China? I don't know how that could possibly end well, guys. It's just bananas what I'm seeing. Another hot thing I've been seeing here is this carried interest loophole that allows hedge fund managers and Wall Street big shots to make hundreds of millions of dollars and pay less in taxes than you do if you make $100,000. Now, they've been arguing about this since I think Bill Clinton was president, and every president has promised to get rid of it. Clinton, Bush, Obama, Trump, now Biden, and now they actually supposedly have this in this bill of Biden's, and that's why these numbers are all weird, because this is going to supposedly offset, and this is going to be kind of revenue neutral, not a big borrowing binge. Well, I got my doubts about this actually staying in the bill till its end. These are some of the biggest donors on the planet. These are the guys who can start political action committees like that and invest Brazilians of dollars into them. I don't know if that's going to stick around. If it does, good for you, government. Now, I want to go over a couple of things we've been talking about on the show that I think are important to stress, okay? I don't want anybody to get the wrong idea about what we've been suggesting everybody does here, about what you should be doing in this recession. I want to kind of go over it all kind of real short and easy to make sure everybody has the gist of exactly what we're suggesting, okay? So on the very first day, very first blog, first show we ever did, we talked about GDP would be, now this was in June, we talked about GDP would fall for sure for the second quarter. We said we were already in a recession. Me being in the real estate industry here in Las Vegas, I get a feel of that pretty quickly. And we were right about that. Okay, so bang, chalk went up for us. We said real estate would have a big correction. Everybody's been telling me, and I'm seeing here in Las Vegas already, that this has already begun. Actually, it's incredible. They've already starting to lower mortgage rates because of this 10-year thing. But real estate is starting its correction. At the top of the market, the people paying millions of dollars for houses, I don't look at that part of the market so much. What I'm looking at is the bottom of the market, the starter houses, the people getting in, buying their first house, young couples, getting started in life. The affordability factor for them is what I'm looking at. And until we can get prices down enough where they can buy, I think real estate's going to keep slumping down until we get to that point. We said that inflation would go higher and would continue to rise. So far, we've been pretty spot on that. Now, what have we told you guys that you should do about it? We've insisted that you start to save money. Start putting together your FU fund. Remember that, guys? We wanted you to make sure that you have enough money put away. We named a number, $25,000. Some people suggested it should be much higher. Great, if you can save more than that, do it. Okay? But this $25,000 should be your baseline, because we really believe that no matter how bad things get or how bad something happens in your life, it's a health problem or one of your kids gets in trouble or whatever happens, that $25,000 should get you through the storm. So we've been talking about that ad nauseum. We've been telling everybody to invest your money conservatively. Well, that's kind of had an up and down. At first, it looked like we were really great. And now the market rallying like it is, it's looking like that was not so great. However, we did not suggest that everybody get out of the stock market. What we've been saying is invest your money cautiously. Invest your money conservatively. What have we talked about? You've heard me talk about preferred stocks. You've heard me talk about blue chip consumer non-durables, soap, food. You've heard me talk about utilities, dividend paying stocks. This is where we want to be, value stocks over big growth stocks, right? Right now, it's been, if you followed our advice, you're still doing pretty good in this market without all the asset up to here when the market starts going crazy to the downside. And there's going to be more of that coming, guys. We can only deny reality for so long. And the reality is coming. We talked about the ECI, the Employee Cost Index, and the wage price spiral, and how this would be a sign to know that inflation is entrenched. It's going to be a real big problem. We're going to see shocking rates before that goes away. Well, guess what? The index was up. The cost of keeping and hiring employees is on the rise, right? Okay, so that tells us something else. None of this is very great news for the markets, guys, okay? We talked about the debt trap and how our corporate overlords and their minions in Congress and everywhere else in our government want to set your life up where basically your life is a series of payments. And you never get out of this debt trap. You're going to pay, work to pay bills, never actually getting ahead, never actually really building any true wealth. We talked about how if you possibly can, not to add any debt on. If you possibly can, to try to pay down your existing debt. And guess what we're seeing in the news, guys? Record-breaking amounts. When they announced credit card debt was up the highest it's ever been since it rated, what is that telling us? People aren't out there buying at Neiman Marcus, okay? They're buying at the supermarket. They're buying at the gas station. Not great news for the market. If people have to go in debt just to live their normal everyday lives, that doesn't last long before it breaks, guys. We talked about our big miss so far. We said that unemployment would rise. And that's been the big, blooming whatever that they point to say, see, we're not in recession. Look, see, employment is strong. Okay, well, that's true. Employment does appear strong if you believe all their statistics. But I've just been seeing a lot of articles about big major corporations laying off thousands and thousands of people. I saw an ad today, Walmart added to the list. That's on top of IBM, Ford, Microsoft, and all these other countries that have already announced giant layoffs. Forget about the real estate business. Robinhood already had a giant cut off 50% of their company. Now they're cutting another 23%. Okay, unemployment is still low. I don't see how, but that's what the statistics say. But here's the thing, guys. Tomorrow we're going to get initial jobless claims. I think that they're expecting 255,000. I think their number is going to be a little bit off. And I got a question that you need to ask anybody that's really intelligent about this economy. If we added 2 million jobs, okay? If we added 2 million jobs, how can the GDP be contracting? Did we have a giant productivity collapse that nobody told us about? Really? Do you think that's what happened? somebody's got some explaining to do, because none of, now I know you're going to come at me with the Fed is buying it all. Okay, if there is even the minutest chance that isn't true, something funky's going on here, guys. Now, I'm sure nothing stays in the dark forever, and this will ultimately all come out, and I'm sure maybe a head will roll, the scapegoat. But all of this still leads me to believe that what we've been saying is right and true. I think that the worst is for sure yet to come. We might see some good bounce good stuff, even a little bit of a decrease in the inflation rate. But now they're going to point to oil and say, look, oil's coming down, so is inflation. But they want to ignore the core inflation now. Before they used to point to that and take oil and food out, right? And then they want to talk about the cost of employment, which is one of the biggest drivers of inflation, because when the boss raises your pay $100 a week, he has to find that $100 somewhere else from the public, right? Anyway, I think that over the course of the rest of this year, our suggestions will be proven true. I think that we're going to give you our very best and most honest opinion of what we see here. Nobody has to follow exactly what I say. I give you guys a lot of data, plenty of data every day, to give you guys the information you need to make up your own mind. But if you want to follow our plan, you're probably doing pretty good right now. You probably got more money saved than you've had saved in a while. Your stock market portfolio is not getting beat up and going crazy up and down. You've got some preferred stocks in your portfolio, which are looking pretty good. You got a small portion, 10 to 15% of your portfolio in precious metals, just in case, a hedge against this strong dollar. Okay, I think that that's where you need to be. Do your own homework. Tell me where I'm wrong. Anyway, guys, I'm babbling on today. Time for me to get home and back to bed. We really appreciate you taking the time to watch the videos and support the channel. Your support means the world to us, guys. And that's why I felt like I had to get a little defensive today and kind of give you guys the right idea of what we've been saying and what we've been doing. Anyway, don't forget, like, questions, ask Chuck Barone at gmail.com. Comment, ask easy questions there. So if you haven't already, subscribe, and don't forget the bell so you get your notifications. Going home to bed, guys. Love you. See you tomorrow. Thanks.